Hello. The topic of unconscious biases has been discussed more widely in recent years. Understanding the unconscious biases that people may have is really an important first step to preventing unethical behavior. Often people are just not really aware that they even have such biases. But unconscious or cognitive biases are biases that all humans, even infants, have to some degree. Many of the accounting fraud cases we'll cover in this class include people who made bad decisions based on their unconscious biases. Where do these biases come from? Unconscious biases are hardwired into our subconscious selves. And Karen Wynn of the Yale University Infant Cognition Center demonstrated that infants having these biases and infants having a rudimentary sense of morals by choosing a specific stuffed animal or toy based on puppet theater plays they had watched. Many of the infants chose the toy or stuffed animal that had done the right thing. Biases can be grouped into categories: biases about the world, biases about other people, and biases about ourselves, which can negatively influence how we make decisions. Understanding our own decision-making process, our biases, and those of others may help us avoid them and improve our ethical decision-making. Well, let's talk about the different types of biases: incrementalism, situational factors, cognitive dissonance, and the bystander effect. Let's talk first about theories about the world. People tend to simplify complex issues to make decision-making easier. But this oversimplification bias can lead to underestimating risk and making poor decisions by ignoring low probability events, failing to identify all stakeholders impacted, ignoring the possibility the public will find out, not thinking about long-term consequences, and undervaluing the magnitude of the consequences in total. These biases are often compounded by the false belief that the world is more predictable or controllable than it really is. This is called the deterministic bias. This illusion of control causes us to underestimate the risks involved in our decisions. It could be memories of past experiences that change to support this erroneous belief, also called hindsight bias. The hindsight bias might develop where people tend to believe that they expected a past outcome before it even occurred, even when they did not. Theories about the world suggest that we tend to blame individuals for events rather than their work environment, policies and procedures, or incentive programs. That's called the attribution bias. The attribution bias often leads to problems being framed inaccurately and can result in decisions which do not correct or may even exacerbate the problem called the framing bias. All of the above biases contribute to underestimating the risk associated with the decisions being made. Our textbook actually mentions the Dieselgate scandal at Volkswagen, VW, and the damage of underestimating risk can have. In addition to not framing the problem correctly, VW's senior management significantly underestimated not only the risk of getting caught, but what it would cost them if they did. Initially, the company even tried to blame a few rogue engineers. One of the most common biases that people have is to defer to those in authority. This authoritative bias was at play at VW as well. In fact, it was raised during the trial of several of those indicted for their roles in this fraud. In terms of theories about other people, people just tend to think of themselves and the groups they belong to or share their beliefs with as better than those they don't belong to, whether it's based on factors of race, religion, nationality, political affiliations, and so on. People often attribute negative attributes to those not like themselves. This kind of perception that our way is normal and preferred and that other ways are somehow inferior has been called ethnocentrism. In business, these unconscious beliefs can manifest themselves through discriminatory hiring as well as promotion practices. Understanding the role that stereotypes can play in our decision-making process is really critical if we hope to avoid their negative manifestations. In my own experience, the best teams are diverse in thought, backgrounds, education, and experiences. As a manager, you will be significantly more successful if you have a diverse team. There are also several theories related to how we view ourselves. Overconfidence bias is important in accounting because auditors confident in their perhaps conservative risk assessments about certain areas of the audit may fail to seek additional information to update their knowledge. People tend to overestimate their positive attributes and to underestimate their weaknesses. It's called the superiority and overconfidence bias. This bias can be caused or exacerbated by the hindsight bias. This can result in executives being overconfident in their abilities to make decisions based on incomplete or even inaccurate information. Martin Winterkorn, the CEO of VW, for instance, was overconfident in his abilities to continue to keep all the facts from coming to light. In addition, people tend to detest losses, which is called the loss aversion bias, even more than they enjoy gains. Research has shown that many people will make immoral decisions to avoid what they perceive to be a potential loss. Two of the most common social and organizational pressures that can cause well-intentioned people to make poor ethical choices, the tendencies to be overly obedient to authority, and to conform excessively to the ethical judgments and actions of peers. Incrementalism is the slippery slope that only gets worse with time. You agree to do something you really don't want to do, and suddenly your past actions are used against you in the future. May start off as a one-time request or something small and immaterial, but always remember that when it comes to fraud, there is no materiality. The textbook highlighted the case of Aaron Beam, the first CFO at Health South Corporation, a company that had a $2.7 million accounting fraud in the 1990s. One day in 1996, the time came when the company couldn't make its projected earnings, and the CEO, Richard Skurshi, refused to report a bad quarter. Instead, he instructed the chief accountant to scatter false assets and revenues throughout the company's 1,500 ledgers to hit their targets. Beam watched this go on for years. He watched as pressures were applied on CFOs to go along with the fraud. Aaron Beam said in a 2014 interview, "I spent 15 years of my life building a reputation of being a very successful, honest, and good person. And that was all wiped out. Today, my legacy is that I'm a felon. I'm the guy that cooked the books at Health South. And anything else I did that I could be proud of will not come to the forefront." Situational factors also play a critical role. Accountants are often under time pressure, and people tend to cut corners when under deadline pressures. Situational factors can also influence ethical decision-making, and the actor may not be aware of the effects. Studies show that when people are under time pressure, they will often act less ethically than in situations when they're not. They will not realize the impact that time pressure has on their decision-making and actions, but the impact is still there. For example, a lead engagement auditor might be hustling to complete an audit on time and under budget and not realize certain steps in the audit process have not been properly completed. Or, which has been my experience, some auditors will mistakenly send information to the wrong client. We saw with the trolley problem from Chapter 1 that the who, what, when, where, when, and where of a problem can influence our decision making. Research shows that if people feel that they're not being watched, they will tend to act less ethically. A greater number of people will try to get away with wrongdoing if they feel they won't get caught. That is why transparency is an important factor, and internal controls are so important. People do not respect what you do not inspect. How we think we should behave is often different from how we decide to behave. This creates a problem of cognitive dissonance, a term first coined by Leon Festinger in 1956. That inconsistency between our thoughts, beliefs, or our attitudes and our behavior creates the need to resolve contradictory or conflicting beliefs, values, and perceptions. The Betty Vincent situation at WorldCom illustrates the dangers of reducing dissonance by changing one's attitudes and behaviors. It also illustrates how situational factors and social and organizational pressures can create biased behavior. The bystander effect is the tendency not to report wrongdoing or try and help someone in need, thinking others will. Think, for instance, of the New York City subway incident or the Harvey Weinstein case. There are also other countless incidents of sexual harassment in the workplace where people just don't want to get involved or tend to look the other way. What are your unconscious biases? What would you do when confronted with an unethical action supported by upper-level management that you don't agree with? Many of the cases of fraud involve people who did not want to, so to speak, rock the boat, or thought it would be just a one-time thing. They went along to get along. But what would you do?